Hello, hello everyone. I'm Tejas Kapasi, and I got a lot of requests regarding SBI mix game daily calculator on which I had written a blog couple of years ago. You can see. So this is my blog regarding SBI mix game home loan and how does that calculates the interest based on the uh, daily basis. Okay? So this is the blog if you wanna read that out, but I just open. So this is how I have basically created a Google Sheet where we can put some inputs parameter here, and it will basically generate the daily calculation like this, like based on each day how much of the interest that you are gonna pay to the bank, and then at the end of the month how much of the interest that you will pay to the bank. Okay, so this it was initial version like V1 we can say, wherein couple of things are missing, like graph is not there, some calculations are very on high level. So what I've done is I created a new version. Okay, so new version is this, in which I'm gonna explain all the sets. So it will basically output of that will give us a yearly look how the uh, how the max gain loan based on the input parameters looks like. So what is the principal amount, what is the interest amount, how much of the principal portion and the interest portion that we are paying to the bank. So this gives you high level summary by year and by month as well. Okay, so this is like month wise summary on which month how much of the interest that we are paying to the bank, and our actual schedule here in this set will have the uh, a daily calculator. Okay, for entire tenure of your loans on a daily basis how much of the interest that we are gonna pay to the bank, and if we put some money, park some money in our OD account, how much of the interest amount we can save. Okay, so that's the main purpose of this tool. So uh, let me start with some disclaimers here first. Okay, so just a second. Here is the disclaimer. I want to read it out very clearly. I'm also an individual person, and I was also struggling to find some daily calculator, and I try to use some online resources on which I have mentioned in my blog as well. Like I took the reference from these blogs, and I must tell you this blog is very helpful, and you can basically get some basic information and basic terminology clear. What is the terminology? How that uh, uh, terminology works in the bank, in your bank statement. So you can basically read that out from here. Okay, so this blog was like initial research for me to understand what is the OD account and how does that work. And I basically try to extend this knowledge further and created this sheet. So disclaimer, right? Again, it's purely education purpose, and I don't claim it's 100% accurate, or I don't claim to have any association with any bank, or neither I know any person in the bank who guides me on this. It is purely based on my own knowledge and experience over the time. I just uh, evaluated this calculator. I mean, built this calculator, added some parameters, modified something based on my experience, and any financial decisions or any decisions that you are making, purely based on this calculation, I would recommend to try this out, educate yourself, take conscious decision on this. Okay, so I'm not a SEBI registered or any registered authority with any of the financial institution. So that's the disclaimer. Now let's jump onto the some basic information first. So some basic information is the EMI is gonna get deducted and kept into your OD account. So it will be reflected in your available balance first. So first EMI will be, if it's a ECS, right? EMI will be deducted from your bank account, any bank account that you have given, right? ECS for, then it will get into your available balance or it will get into your OD account, and based on your EMI date itself, right? It will be, the principal amount will be deducted. So the next thing is principal and the interest component of it. So principal, bank will basically, bank has their own schedule, right? And that will given to you as well. Especially for this max gain, the schedule is not accurate as per the formulas. So we will have some principal values in our tables, but bank will deduct some principal amount on the day of your EMI deduction, and that day that principal amount will be reflected, and in the end of the month the interest term component gets calculated, and then you will be able to see the debit entry of your interest in your bank statement. So now the question is, the principal that was supposed to go against drawing power, right? Why it went to available balance? That's what how this RSCPC manager basically explained to me, and basically when I was inquiring, right? So EMI will get into your uh, OD bank OD account, and then from OD account, from your OD account, principal component will be deducted. Okay, so don't worry about this. We'll see this at the end of the month. We'll be able to see the debit entry of the interest. That's what I mentioned. Okay. So what, some terms, right? Total limit or the sanction limit that we will see is basically nothing but the outstanding principal amount every month on the day of EMI, right? This principal amount is getting deducted. The only thing that we observed, personally I observed, is the principal will be deducted. Uh, as per the calculation, it will be deducted on the same day, but it will reflect after 1 or 2 days after the SBI uh, technical job runs, and that job basically gets finishes right after. So it may take 1 or 2 days to get reflection. So just in case if you don't see the total limit or the total uh, sanction limit is not reduced on the very same day, it generally takes 1 or 2 days, and if there is a holidays or something, it will take 2 or 3 more days that. But it will do a calculation based on the exactly same date of your EMI date. Next is the interest calculation, as I mentioned, right? The interest calculation is going to be based on the daily basis. So bank calculates interest on the daily basis, like every day, how much of the outstanding amount is there, right? If you have parked some amount, that amount would be reduced from your total outstanding for the interest calculation for that particular day. Okay, and that how for every day that the calculation will be done, and then at the end of the month bank will deduct the interest accordingly, and that debit entry from your OD account will be reflected in your bank statement, the OD bank account statement. Okay, so available balance is the balance where you, whenever you park the money, right? Whenever you put surplus fund in your account, it's your fund, right? You are just parking that amount for a while so that you, uh, given for a given time, you are reducing your outstanding loan amount. So that fund is yours. You can withdraw that fund as well. So the amount of time that you keep your surplus fund in your OD account, it will give you the advantage of saving the interest, right? And the fund that you parked uh, will be shown as your available balance. Okay, so that's these are some key terms. Okay, so there is some usage guide, but I will just directly go to the calculator and basically explain that, since we have a limited time to go over, uh, and since I'm going too fast, feel free to add comments, reach out to me via email, and and ask me questions in the email or in my channel as well. Okay, I already got a number of emails from my blog, and that's why I thought to create these sheets. I try to see some YouTube videos where, uh, if possible, these are explained or not, but I don't think there is a specific channel that I found which explains the daily calculator. So I just created this one. Okay, so let me show the structure of it. So first is the original schedule. The purpose of this original schedule is to visualize how the interest amount looks like and how this spread of the loan looks like. Okay, that's the only purpose of this original schedule, so that we will compare it with the actual schedule. Okay, so actual schedule is where we are gonna basically maintain everything. But let's go one by one. Original schedule. These are the cells. Okay, these are the cells that you need to enter your loan amount. So I have entered, let's say, 50 lakhs, right? So 50, 50 lakhs, and rate of interest we can say, 8.65 as well. So the moment you update it, it will basically do some progress and do the calculation and update this sheet. Okay, so the tenure is the number of months that you have taken the loan, and estimated EMI will be calculated automatically. But then there is a actual EMI. Sometimes what happens, bank will give you some near about figure for the EMI. So this is going to be your actual EMI. Okay, or maybe we can say 44,000 as well. Okay, so, and EMI start date. So this is the date when your EMI is gonna get start. So these are the key information, right? Now, next thing, first thing is this. Next thing would be your disbursement date. Okay, so when does your sanction amount got disbursed? So if it got disbursed on, let's say, instead of 1st June, let's say it is getting disbursed on 4th June, right? So 4th June, your loan amount 50 lakh is given to you, and the day the loan amount is given to you, the interest will be starting, right? So you can see that your date of EMI is coming on 10th as per this, right? 10th is your 10th day of every month will become your EMI day. So if you see, it will populate his EMI on every month on 10th date. Okay, then rest of the other calculation will also be calculated there. So this is the second item that you will be putting in. Sometimes what happens, your property is in progress and full amount is not disbursed, right? So sometimes what happens, only the 25 lakh got uh, disbursed, right? So 25 lakh becomes your disbursement amount, right? And if you see, let's say after some time here, at 25 lakh, again, this is the amount which got disbursed, right? So now this time it becomes the, or 49 lakh 84,000 is your total uh, outstanding amount remains, right? Because some of the EMI payment has been done, so that goes against your principal as well, right? So this is how you can basically uh, try to bifurcate your disbursement. So it will basically adjust the calculation automatically. So this is one of the example. So let me put the 50 lakh disbursement on the 4th June. So you get basically full amount on the very same day, 4th June. In a single sort, you get all the amounts. Okay. So next column is the EMI payment date that is getting populated automatically and the date of it. So only thing is sometimes I have observed due to any reason or in the initial period when your ECS is not completely set up, this EMI is gonna get deducted manually by the check, right? So it doesn't happen on the exact same day, like on 10th June. Sometimes bank does it on 12th June, right? So it's like a check based, right? So what you need to do is just put this EMI tag here and remove this tag from here. That's it. Okay. You are what we done is we just override the value manually, and it will do the calculation automatically. Okay. So this is how uh, we see the EMI date. Now this is the very important column. This is like a surplus deposit or the withdrawal amount, right? The additional amount that we are parking for this account on a particular date is what we are going to put it here. So for example, we got a disbursement of full amount here, correct? And let's say just after the first month, I am putting 10 lakhs. So if I'm parking the amount, I will just put the amount in the positive sign as it is like this. So you can see, let me just remove this. And if you see this estimated interest, right? If we don't do anything, our estimated interest was 53 lakhs. So this was the principal. Assume that this is your loan amount, right? So this is the same amount that you are gonna pay. Additionally, this is the interest that you are gonna pay. But if we park 10 lakh in the initial years, in the very initial stage, right? This is the amount that you are parking. You are not prepayment, right? This is not a prepayment. You are not doing prepay here. It's your money. You are just parking it for on this date. You can see your available balance becomes this, right? So this is your amount. You can withdraw even very next day. Okay. So on the very next day, you can withdraw any amount, and you can basically do all this transaction here and see how does that value looks like. Okay. So you can do as many transaction. Okay. Sometimes what happens uh, on the very next day, let's say you withdraw 25,000. Also, you deposit 50,000, and then again you withdraw 15,000. So you can do as many transactions from your OD account to your linked saving account, right? Or any accounts. So basically, you can put the effective value of that day, and it will basically do the math and update the figures, right? So for a given day, if you are doing multiple transactions, you just need to update the final effective transaction value, or basically do your math, apply the math here like this. So it becomes a transactional history for you for later to come back and see what how much of amount of transaction led to this value, right? So this is one way that you basically see the surplus and the withdrawal amount. Uh, in case of withdrawal, you put the negative values. So this 10 lakhs, right? If you scroll down, uh, this available balance, it becomes right available to you. So if we scroll down, it will be available for us to withdraw as well. Okay. So what we are looking at right now is the original schedule, right? So if you park on this date, how much of the interest it is gonna look like? So on the original schedule, you just update, uh, uh, you just basically don't update these values only, and in the actual schedule, we will be basically gonna update everything on a regular basis. So in the actual schedule, again the same table, apply exactly same value here. Uh, Let me remove any values from here currently, and I'm keeping this. Okay, let me do one thing. Okay, so this is the table that we saw as it is coming here. Uh, Next part is I just put some summary, benefit summary. How does it looks like? So let us copy the value 8.65 from here and we consider 44,000 as the year. Okay. So since we are not doing anything, right? And what was the date? 10th June, 4th June. Okay. So we see saved interest is nothing because we are doing nothing differently from the original schedule. So the moment we park, let's say 50,000 as small as that. Okay. So the moment we park that amount, this estimated interest will be reduced. And you see total interest that you can save is 2,13,000, right? So this is the indicator uh, which will basically give you the idea how much of the interest we will save if we continue to park this amount forever for your long tenure. And you can also see where you are becoming where you are where you will be able to finish loan early. Okay. So this is the one way to enter your surplus and withdrawal amount, and that's what we saw earlier. But this is the sheet, actual sheet, where you will basically update all these transactions. You have to basically uh, be a discipline in order to apply, make changes of all of your transaction history here to make sure the daily calculator is up to date and shows correctly. Okay. So I'll put some random value to basically display withdrawal as well. So if you withdraw 10,000 on this date, the effective benefit is this amount in total. Okay. Yeah, but there is a argument, right? This amount is stayed park in this account, OD account, so you don't earn the interest component like other interest. But one side you are not earning the interest, but the other side you are saving the interest. Like for example, if you are earning interest in somewhere in the FD, let's say 8%, 9%, or some other way, right? In stock market or anywhere, like you earn more than that. Okay, so you need to evaluate how much you earn the interest versus how much you save the interest for your asset that you are buying or that you bought, right? Okay, so not going into that route. Let's stick to this surplus amount, withdrawal amount. Okay, so next one is the estimated principal. Wherever it is marked, don't change. It is like value to read, and then these are the values that is being used for these indicators somewhere. So it's like estimated principal for that particular month. As I mentioned, right, that whenever your date of the EMI is at the very same day, the principal will be deducted. So this will be deducted from your principal outstanding amount, which is like your drawing power. Okay, so it will be reduced from that, and uh, it will be reflected in your drawing power limit. So there will be no separate entry in your statement, but there will be you will be able to notice the drawing power or the total limit is reduced in your bank account. So try to see the previous value and the next new value in your bank statement, or basically when you look into your mobile application. Only caveat here is this principal amount is calculated based on our formula, but bank has a different formula, or maybe the different way to calculate the principal, and generally they will be able to provide you in your amortization schedule, but it generally varies a little bit, few few hundred to few thousand rupees here and there. So what you just need to do is on every month when your EMI is getting deducted, after 1 or 2 days, once the job is run by the bank, it will be reflected in your account. Just take that value, just check out that value, take the difference. Uh, so put this value 50,000 here, right? 50 lakh, sorry, 50 lakh was the original value, and enter the latest. Okay, so the day when EMI is getting deducted, take the value of your DP or the total limit, put it here. After 1 or 2 days, check your new DP. Let's say this is your new DP. Uh, okay, so this would be, yeah. So this is your principal amount that will appear. So for example, if you if you see some different amount here, okay, like this, then you need to basically take this amount and put it here. Not here. This is estimated. This is the actual. So you take the actual value, override this value directly, and put it here. Okay. So it will do the math automatically. Don't worry about it. Uh, so try to try to maintain this principal reduction so that it becomes that drawing power becomes accurate, right? So this is one way. That's why I have put it here. Uh, this calculation will remain always be like this. So every month, principal deduction, to accurately put it, do this, maintain all these plus and minus entries on a daily basis whenever you are doing some transaction, or at least once a week, sit on the seat and make sure all the entries you are entering to make sure your predictions are correct, to make sure the forecasting that you wanna do based on your parking amount is accurate enough. Okay, so update or override this that which saw interest. Then this is the interest actual for daily basis. This is very interesting column. So this shows how much of the interest that you are paying to the bank on a daily basis. Okay, so based on the amount that we parked, for example, here we were giving 1,185. The day we parked the 50,000 rupees, from that day we are giving this amount of interest. Okay, so you can basically see on a daily basis how much of the interest that you are saving, and then there is a uh, interest accrued as well, which will show you total interest till that particular day uh, in the month. Okay, so this is the first day, then additional this amount, then addition of this, then addition of this. So it will basically show you in the month how much of the interest that we are giving, right? So so this is the monthly interest. So we can see for this month we basically accrue total this much amount of interest, which is this interest. So on the monthly basis, this is the interest amount that bank in your bank statement you will see as a debit entry. So this will be the interest amount deducted from your OD account, and it will be deducted from your available balance itself. Okay, because available balance is the total balance that you have. Okay, so book balance is automatically reflected accordingly. So these are like a formulas, and you all see all these values or all these columns in your bank statement. But I'm not getting into much detail of it. But uh, we need to basically see what is the point of concern for us, right, as end user. We wanna make sure our available balance is shown accurately, interest is getting deducted accurately, because right, you don't wanna pay more interest, and you wanna also make sure your principal amount is getting deducted in a proper way, order where you know how the spread of the loan goes. In the initial years, the principal generally gets deducted little less, and then eventually that gets increased, right? So you will try to check your principal as well based on this uh, sheet as well. It's not always going to be the same amount. Principal is not going to be the same amount, but based on this calculation, interest is going to be more or less same. It can be different 1 or 2 rupees, 3, 4 rupees here and there based on some rounding, but shouldn't be much more than that. But principal, you will be able to see a little bit larger difference because bank will be reducing the principal based on certain formulas for this specific loans. It shouldn't be a huge difference, but there will be definitely a visible difference, and that's why you will be able to update the value based on this calculation that I mentioned and update it here. Okay, so don't forget to update this value. So that's about the principal interest amount here. So I mentioned, right, whenever there is a change in the interest, right, if you see at the end of the month the bank has deducted, instead of 31,535, bank might have deducted 31,538 rupees. So you will just update this column with that, this cell with the value that is reflected in your bank accounts. It won't be much difference, but whatever the value is there, you just need to update it and mark it in a yellow cell, right? So you can basically see the difference between these two. So it would be like a good practice to maintain how much of the interest is getting deducted, and this basically this saved interest and this high level parameters gives you the final values correctly. Okay. So next thing is this book balance, right? So book balance is getting updated at the end of the month, and it will also it's basically based on every transaction is gonna get updated, and you would be able to tally in your statement as well. So ideally, in our purpose, we can see whenever your book balance is becoming positive, right? That's like a break-even point where you are not owing. Uh, you are at the stage where you will be paying zero interest. In fact, okay. So let's find out that. So okay. So here is the point, right? So this is called as a break-even point where on this year, okay. So on this date, you are becoming positive. So now this point onwards, if you see, you are getting into the positive balance. Okay. So and also you see the interest calculation is becoming almost zero here. So here. So from here we are not paying any further interest to the bank. So your loan will still continue. Your loan will still continue, but if you keep your parking amount as it is, right, and uh, pay the EMI as it is, you are not paying any interest to the bank, right? So what happens? Your EMI goes to your bank account, that OD account. Okay, so let's see this entry. Here, your interest is becoming zero, right? So on this, starting this day, we are not giving any interest to the bank on the 232 month, right? So 8 years before, right? Almost 8 years before, uh, because 240 was the number of months, right? So here we are coming as a zero. Now, if you see, EMI will still continue to be get deducted, but what will happen? This 44,000 will be deducted from by ICS from your any bank account. That amount will go and come to your OD account, right? So the moment it comes to your OD account, what happens? It will be added to your available balance. Okay. So it will be added to your available balance, and then a principal amount for that particular month will be deducted, right? So your available balance will be will be like that in that calculation way. So for example, available balance was this, and then this amount, this was the EMI amount came into your account. So this becomes your available balance on that day minus minus uh, this amount 41,000. So let me try to showcase it here. So available balance was this. Available balance was this plus this is the EMI amount minus principal on that principal of that month, right? So this is the amount that remains in your bank account as available balance, right? So which was validated here. So that way, what happens? The available balance slightly become to get increased, and your principal amount is also getting very high, right? But you are not paying any interest to the bank. If you see interest, EMI, sorry, the monthly interest accrued is zero. So at this point, from this point, you are not giving interest to the bank. In fact, this is the additional. the book amount is in the positive side, right? So from this point onwards, you are not earning anything, right? Because even if you don't keep this amount, more than this amount, it will not give you any advantage. So what you should be doing is you can withdraw the amount, just nullify this to the positive amount, some positive amount, and continue this way, right? So basically, we are making sure that we are not paying interest. Also, we are not keeping fund which is not giving you the further advantage, right? So that's the kind of a logic that you need to basically think, right? So what I'm trying to say here at this point, if you withdraw, let's say if you withdraw 50,000, you see your 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 book balance remains negative, and it will start taking some interest amount, right? So this is how you basically control your book balance. So this is how this will start getting the interest on a daily basis, because we are doing it on the very last month and last month of your tenure, right? So that's why we don't see much of the advantage of doing that. So basically, purpose is that only to carefully update these values and see how that is reflected in here. Okay. All right. Moving to the next thing here. You see there is a button that I added. Is like the moment you click on it, it will get you the current date of the cell, because there are so many rows. It's very difficult to manage. Now I wanted to go to the next part as well. So this is like a floating rate loan, right? Generally, banks can charge more percentage than other loans. So initially, you might have some lower side of a rate. Then after some period of time, you might have higher rate as well. So what you just need to do is update this, override this value here itself, and update it like this. So the day that you basically got to know from that day that interest is gonna get updated, just increase or basically update the number here. You can keep doing it like whenever you are updating, whenever you are got to know when it is got updated. Okay, so it will basically calculate uh, accordingly. And while I'm updating, if you see my saved interest is going negative because comparison to the original schedule, right? We are giving more interest, correct? So generally, what you are expected to do is at least apply this rate of interest in the original schedule as well accordingly, so that you would be able to see the difference here properly. So that's what, right? In the original schedule, you're expected to update the disbursements, some key parameters, right, which bank is controlling. That is the parameter that you can update, and the parameters that you are able to manage, that you can update it here. Okay, so that way you can see the difference. So rate of interest, you can update here. So for example, if I consider 9 from the initial, right, and if we come here, then we can see. like this. Okay. So this is what for the rate of interest column. The rest of the other columns I already explained. Some of the information I have basically updated here to explain what it is about and when to update which particular column. Next is very interesting chart that I prepared. So this is like a monthly summary. It will give you for a 50 lakhs of loan, right? And it will basically give you a tally as well. Since I have considered total 30 years calculation, so that I have given some fixed table size here. So depending on your loan tenure, it will calculate, or it will show all the rows here. Now 50 lakh was the loan. This is like the interest, and this is like a total payment, total amount that we paid to the bank. Okay, so and it will show you for which month of the year that you are, uh, how much amount of that you are paying to bank. Like this is the principal amount for the year. This is the interest amount for the first month. This is the total payment, and this is like the principal outstanding amount, right? This is like a cumulative interest, and this is like a cumulative principal. Okay, and summary for the year level as well. This is what it will show you: 50 lakhs of loans, and because in between we increase the rate of interest, right? So loan becomes 22 years instead of 20 years, and we can see total interest that we are paying is 59 lakhs, and total amount principal plus interest is this. Okay, this is like loan paid to total loan paid till that particular year. So first year we are paying 1.83%. Second, by the second year we are paying total 3.87% of loan. So if you see in the initial years we are paying very few chunk against the principal outstanding, right, against the loan. So that's how this loan works generally initial years. So that's why it is encouraged to park as much amount of money in the initial period of your loan. Okay, so if this is the initial period of your loan, and if you are getting salary at the end of the month, if you put at least, if you basically make some habit to put some money on every end of the month, you will be able to save very good chunk amount here. And if you do for very few months as well, we are able to see a larger difference here, right? And there are chances that you might need to withdraw money as well. So I'm trying to do some kind of those transactions. Okay. So this way we will be able to see graph further here getting updated. Say in the doing so in 21 and 22 it is becoming zero. That means our last 2 years we are not paying interest to the bank, only principal is getting deducted here, right, for entire year. So you say 24 months you are not paying interest by doing this exercise, putting smaller amount at the end of the month, and very limited amount of the withdrawal, or like that way. In total, we saved interest of this much amount because our interest rate was starting from 8.65, then we basically increased to 9 and 9.15. 8.65 and then 9 and 9.15. You see, from very initial years itself, right? So this is like a difference that we can see, and this is like a visual. Almost we can see, right? Half of the principal amount is 50 lakhs, 48%, and interest that we are giving is 51%. So basically, we uh, reduce the interest to this amount, correct? If we were to park, let's say, just I'm trying to check, 5 lakhs. So you can see how much of the interest that we are paying. A huge increase in the saving of the interest, 22 lakhs in the initial years, right? So this is how we can basically play around, put some figures, try to see how much of the interest that we can save. Okay? And this was the summary view. It gives you, this is the principal amount and this is the interest amount. If that gives you a, a visual portion, let me try to do one thing. So this will give you visually. So initial years you are giving much interest and little less principal, and then your principal is becoming in the increasing trend, right? So this is how this entire calculation works, and I hope this helped you. I took a longer than estimated time, but I think this will help. I don't have any experience of recording the video, so uh, I appreciate you bear with me and listen to me so far. So, in order to summarize, right, we saw this original schedule file to basically a predictor, update the loan parameters which are in the control of the bank. This is the actual schedule file, it's in your control. Try to maximize the use of it. Create a clone of this file. You can go here, make a copy of it, and apply the numbers according to you, and try to use this. Okay, and please like, share, subscribe to this. I'll try to improvise the content and try to answer your questions, and I hope this helps. So thanks a lot for your time, and see you soon.